The mortgage advisor will be able to recommend the best bank for the situation that you're in and just work with the bank that's going to give you the best result. They can help you understand the differences between the banks. I also think the added value is mortgage advisor usually have a very good understanding of the buying process. Welcome to another episode of Homeseeker Podcast, where we talk about how you can accelerate towards your first home. And today we're discussing a common challenge for first home buyer, navigating the financing piece and also just understanding how that buying process works. I'm going to dive into the 4 reasons why you would consider using a mortgage advisor and how you can overcome some of those challenges as a first home buyer. So imagine Sarah, she's just trying to buy her first home and she's going to all these different banks to figure out an option. She gets an approval, some of them slightly different, but then they're also different interest rate. The loans, they all have a different name. And she look at these approval letters. Some of them are 2 pages. Some of them are 1 page. It doesn't look very formal. Some of them have 3 pages. And all of them have a different structure, and she just lost in the details. At the same time, she needs to navigate that whole buying process. She has to talk to agents. She has to organize the lawyer. It can be very overwhelming if you think about it. And the thing is, she has to manage all of this and spend all that time above her work, above looking after the kids, cooking meals for the family. It's not just overwhelming, it's borderline torture. So here are the 4 reasons why you would consider using a mortgage advisor instead. The first one is that a mortgage advisor will have multiple banking options. So instead of yourself going to different banks to get these approval, a mortgage advisor will have access to all major banks on the market, and to understand what your situation is first, then recommend the bank that is going to be best fit for you. There are a lot of things that you won't realize as a new buyer because you need to think about the flexibility of your repayments. How does your income come in? How big is the mortgage that you're looking for? Is rates going to be the main priority, or is it going to be flexibility? Flexibility, like, if you have lump sums from commissions and bonuses, you want to pay down the loan faster, you might want to use offset loan. You also want to understand maybe how you utilize your budgeting, right? Because if you have separate accounts, offset is perfect for that, but you're like, hey, I just want simple, one account, revolving credit might be better. So going to a mortgage advisor will give you a better outcome because they want to understand your situation first and then recommend the right option. The second is to give you time back, because if you had to sort all of this out with different banks, there's a lot of communications. There are a lot of back and forth because you don't get 4 letters that have the same format and same wording. It's going to be 4 different banks, 4 different letterheads, 4 different terms on the different loan types, and the structure of the letter is different, and you have to talk to 4 different people. So it can be quite daunting. And also, you're going to disappoint 3 of them because if you just go with the 1 bank, 4 of them did work and only 1 of them gets your business. The mortgage advisor will be able to recommend the best bank for the situation that you're in and just work with the bank that's going to give you the best result. They can help you understand the differences between the banks. I also think the added value is mortgage advisor usually have a very good understanding of the buying process. They're not just there to sort out the loan. They're there to guide you with the buying journey. They can deal with the lawyer on your behalf. They can deal with the agent on your behalf. So you can minimize your communications. They probably have a network of, building inspector and perhaps someone to do project management if it's renovations. They usually have some lawyers that they would already work with and some agents that they'll know to make that journey a bit easier. And all of this is to buy you back time because you might still have a family to run. The third reason is to understand the difference between a specialist and a generalist. So if you think of it in a doctor's situation, if you have a specific stomach issue that you can't figure out, it's ongoing, the doctor might give you Panadol, but if you want further understanding of what the situation is about, you probably need to do some scans and go to a specialist. This is the same with a mortgage advisor. Now, just to give you some context, if you went to a banking consultant, I talked to a friend the other day, their top consultant is doing 25 million in loans in the whole year, and that's considered top. A mortgage advisor, on average, will do 2 to 3 times that volume within the same year. So they have a lot more repetition in terms of what to do with a mortgages because they don't have the pressure of needing to sell other products like insurance and KiwiSaver on top of their mortgage. So the specialization means that you are talking to an expert opposed to someone that might be more spread out and then they're trying to hit a target. Again, they already work with a lot of different consultants in the industry and they will know that process a lot deeper. In most cases, mortgage advisors are ex-bankers. Banking consultant might be a stepping stone to another role that the banker might be doing. So what am I trying to get at here? Simply put, mortgage advisor probably have done their job for longer and done more repetition than your average banking consultant. And if you look at the statistics around how much business is written by mortgage brokers, in America is over 80%. In the UK, it's over 80%. In Australia, it's over 70%. And now in Auckland, it's a growing market for brokers and advisors, and it equates to around 60% of all mortgages done. So if you looked at other countries, if most of the business are done for advisors and brokers, it probably means that there are value that they're providing. And that is the trend that we're seeing in New Zealand as well. And last but not least, my favorite one is that a mortgage advisor can focus on the long-term wealth building of your journey. I always tell this to my client, the first house is not your last. You might think you love this house at this current time, but you might not so much when you start having a bigger family and you need more space, you get a pay rise. So when you sell this house and buy a new one, you want to be able to sell this current house for as much as possible so your upgrade is a lot easier. And sometimes you need to plan strategically. If Sarah just went to the bank is focused on getting that transaction done. If you go to an advisor, they want to know what is the bigger goal, what's the bigger picture, what do you want 5-10 years down the track, and how important is it for you to make a really solid property decision now? Or maybe it's blended for you. You want to focus on the lifestyle a bit more, and then maybe as long as it's got some decent capital gains or capital improvement, which means you could spend a bit of money on this house and increase the value of the house. That's capital improvement, and how important those things are to you. Because if those things are important, then I would say mortgage advisor is going to be able to guide you a lot better. And so a quick plug-in, if you want to work with a mortgage advisor, then you can check out Mortgage HQ. This is what we do. We help clients get into properties. And all our senior advisors have one thing in common, is that they have gone through that first home buyer process and they know how stressful it can be. They're there to support you. And what's also really important to note is that they have bought their first home and they have learned to use the equity to buy other properties and build a portfolio. So they're not just about the transaction, they're about building long-term wealth with you. I remember back then when I was trying to buy my first home, I went to like 4 to 5 open homes every weekend and I had 8 failed auctions, I think it was, and it was like the 9th or the 10th one that I actually won. But luckily, I did have a mortgage broker at the time. You know, they were the one that showed me how I could get more lending. They showed me how to get another $100,000 lending because I could use my mum and dad's property as a collateral. That was a game changer for me because I went from something like $550K approval to $700K, and I ended up buying Mount Wellington 3-bedroom for $670K. They even showed me how to recycle my equity, further down the track so that I could buy another property. But that first home, I actually ended up buying it and then renovating it, got a bit of value out of it. Then I topped up to buy a Mercedes. Was it the best financial decision? Maybe not. Certainly I thought it was a smart decision, but nevertheless, that is something a mortgage advisor can guide you through so that you know what kind of options are available to you. There are 4 reasons why you would use a mortgage advisor. The first one is having more options available to you. Second one is to save you time. The third one is a specialist. That's what they do best. And the fourth is the long-term planning. Your first property is not your last, so make sure it's a good decision. If you have learned something new, all I ask for is one thing, and that is to share this episode with another person that will benefit from it. Until next time, I'm Blandon, signing out.